Hello everyone, it's Khaled. Welcome to today's daily pitch, 13th of Jan 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Looking at our economic calendar, we can see that we have today an important economic data, which is of course the CPI or inflation in the US. Okay, so of course today everyone is waiting for the CPI in the US, which is expected to be similar at the previous. The CPI year over year is expected to be at 2.7%, while the core, which is excluding food and energy, is expected to increase from 2.6 to 2.7%. This number is still higher than the Fed's target, which was at the 2%. We will wait and see what are the numbers to be released and what will be the market impact. Let's move on to the charts and see what is going on. Looking in general at the overall market sentiment, looking at the US dollar, we can see that after yesterday's news related to the US president and Jerome Powell, the conflict that's taking place, the dollar index dropped a little bit and currently at this level at the 98.7, even it can dig a little bit higher to the 99. Regarding the 10-year treasury yields, rejecting the 4%, currently at 4.2, and as for the VIX, it's still at the 15 level with no major fear in the market. Today we will be analyzing, the first thing is the DXY. We will go a little bit into details. We will put some scenarios regarding the inflation data. Let's move to the DXY. Okay, so the first scenario for today regarding the DXY, what if the inflation numbers are higher than expected? Let's have a look here. Let's say that the inflation, the CPI, mainly I will be looking at the year over year, this one, and the core as well, the yearly, not the monthly. If the numbers are higher than expected, I believe this will give some strength for the dollar index. Even during the news, if we see some kind of pullback like this, we could be moving higher to the 99, and in case we have the additional momentum, we could be breaking, and my next area I will be looking at is here around the 99.5. Of course, it all depends on how much the number is higher than expected. Let's say if we had a CPI at 2.8, it's something. At 3% is something else. At 3%, we could be visiting the 100 once again. So this is the first scenario in general, a higher than expected CPI. We will see the dollar index doing the following movement. Let's make this by green. The next scenario, what if the CPI came in lower than expected? A lower than expected CPI, this will indicate that the Feds could cut interest rates soon during this year, and this will give some weakness to the dollar index. We could be trading lower. My first area will be here around the 97.5. The final scenario for us for today, and the least favorable scenario, what if the numbers are similar to forecast? In this case, usually the price action will be choppy and we will not find, there will be no clear direction in the markets. In this case, I believe we could see some just volatility with no clear direction, waiting for the next fundamental catalyst in order to have a clear direction. This is the scenarios for the CPI related to the dollar index. Let's move on to GBP JPY. GBP JPY is currently at a very important monthly level. Let's zoom in. I will be deleting all these. Zooming out, you can see that currently we are at the 200 level. The 200 level, we haven't seen this number since a couple of years ago. Why the Japanese yen currently is suffering from this major loss? If we look at the daily time frame, this is GJ. If we go to USD JPY, we can see that it's moving up, almost reaching the 160 level. So first we must watch for Bank of Japan for any intervention from the Ministry of Finance. Fundamentally speaking, what's giving this weakness to the JPY, it is the fiscal policy. The markets are expecting the government to have some early elections, and in general, the government and Bank of Japan are working opposite to each other. What does this mean? The Bank of Japan is looking to increase interest rates in the upcoming month slowly but gradually they are going to increase interest rates, while the Japanese government is looking to stimulate the market, pump more money in the markets. Currently, this is what is holding more weight. The Japanese government or the fiscal policy is looking to stimulate the market, pump more money in the markets. How this will be reflected? It will be reflected weakness on the Japanese yen. The Japanese stocks are printing new all-time highs. Let me see here. Yes. These are the Japanese stocks. They are printing new all-time highs. The Japanese yen is dropping. That's why we are seeing such weakness and such price levels. So moving to GJ, what do I like to see? Currently, I'm on the daily time frame because, as we said, we are having some strong volume and volatility. I will be marking these zones, and we will move down to the 1 hour time frame to see what are the potential scenarios or trade ideas we can get. And I will be marking the 215 level. So let's zoom in a little bit to the 1 hour time frame. What do I would like to see? The first thing I would like to see on GJ is the following. Price just making some profit taking, a pullback, moving down to this will be my first area I will be looking for. So scenario number 1, let's go up to the 215. In case we reach the 215 and I start to see that the bullish candles are starting to get weaker, we are consolidating, or we are seeing any technical formation indicating reversal, like a double top, a head and shoulders, whatever technical formation, I would like to see the following price action. And my next target will be this small minor support, if you want to call it, at the 212, 213 price level. Scenario number 2, and which is the more favorable for me. After all this strong bullish momentum, I would like to see some pullback and then continuation of the trend. What does this mean? I would like to see price rejecting here, even breaking below this level, retesting these candle highs, and from here reaching the 212. I will monitor the price action. In case I see the candles failing to break below these candle highs, or specifically failing to close an intraday candle, failing to close below the 212, this could be an indicator that we could see such price movement, and at least we have this range to cover. This will be supported technically, that here we formed an accumulation area before moving up, and fundamentally with what I mentioned before related to the Japanese yen weakness. The final scenario, what if there was a stronger profit-taking move or some comments from Bank of Japan giving a little bit strength for the Japanese yen? In case we move down again to the 210 and we reject, I will be looking for such price movement. My first area is here, the 212, and in case we are able to close above this level once again, we could see the following scenarios. These are the scenarios that I would like to see on the Japanese yen. Finally, let's move on to gold and see what is going on with gold. Looking at gold, we can see that yesterday gold printed a new all-time high. It was supported by the dollar weakness and the uncertainty that is going on in the US, as we said, related to the conflict taking place between Jerome Powell and the US president. With today's CPI data, of course, it will have an impact on gold. The first scenario I would like to see on gold, what if we retest again the 4,630? Reaching this level and failing to break above these candle highs, and specifically supported by higher than forecast CPI, I believe it will be like a good timing for some profit-taking move at this level, and we could be breaking lower. I won't be surprised to see price retesting the 3,400 as the first area of interest. This is the first scenario I will be looking for. The next scenario on gold, what if the CPI data came in lower than expected? A lower than expected inflation data, this will be negatively impacting the dollar index and positively impacting gold. For gold, in case we broke above these candle highs at the 4,630, Here we are in new price levels and we will never know where price will react. We will draw some psychological levels. The first psychological level for me will be around the 650. I will be marking this one. And in case we were able to break higher, my next psychological area is around the 4,700. Breaking above these candle highs or being in a price discovery, honestly, it's not the best scenario for us because, as I said, we always prefer to see some kind of pullback, rejection, and then move up. Talking here about this scenario, in case we have this pullback reaching these levels to the 4,400, it would be very nice because in case we see rejection at this level, in this case, you have a range to play at least. For example, this is the first target. It will be to the 4,540, and additionally, we have another target which could be at the 4,620. So these are the price level I will be looking for. Of course, if there was some really good economic data, really high inflation numbers giving a lot of strength for the US dollar, I will not be surprised that gold, after all this bullish momentum that we saw, that we could revisit these lows here again at the 4,280, keeping in mind, fundamentally speaking, the factors that was giving gold the move up are still there. I mentioned it yesterday in our educational webinar. It was a very interesting webinar. A lot of people asked very interesting questions. So as I said, the fundamental factors that gave gold the bullish momentum is still there. So any kind of pullback would be very favorable for any asset class after this bullish momentum. That's why even if we reach again the 4,250 to 75, I will be looking for any kind of rejection before taking advantage of such price movement. So guys, that's it for our analysis for today. Keep in mind, we have the CPI expecting high volatility. Wait a little bit for the market to absorb the numbers, not to get tweaked out or your stop loss get hit due to the spread and volatility, and trade safely. Finally, if you like our content, don't forget to leave us a like, subscribe, and you can join our Telegram channel mentioned in the comment section. Thank you so much for joining, and we will see you soon.